Hi, and welcome to the Trader Today for the 28th of October. My name's Tom. I'm a senior trading analyst here at Trend Signal, and I want to run you through the latest opportunity we've had to long the American markets, the SPX 500. Talk a little bit about how we identify these trades and push them to, I suppose, their max potential. So, for a little bit of context, with Trend Signal, we've been teaching people how to trade these methods since 2003. We have a pretty simple setup for end of day trading here, ultimately. Now, the be all end all is the sniper disc that you see on the screen where my cursor is. Green disc tells you to buy, red disc tells you to sell. Pretty simple. We combine that with a couple of different targets. However, selecting our targets and the probability of the trade going on to reach them is something we do by looking at the additional indicators. So let's go through them. There's 7 different things we can look at, and you'll see kind of naturally how the best kind of take falls out of doing so. So we have a sniper disc, a green one to start with. Okay. Underneath, you can see we have the weekly trend and monthly trend working in our favor. So 2 sources of momentum on the shorter scale, telling us that this could be a good buy opportunity. We don't need them, but they're extra strings in the bow. You can see that we have a blue infill. Now, this means we're trading counter trend. However, do bear in mind that we're trading counter trend to a bit of a pullback that's been going on for a couple of weeks and months, and it's literally only over a day that we start to see the potential for a counter trend. But we think, you know what? We've seen a heavy market sell off. Let's go in for the buy anyway against the trend and try to follow the overall trend of the market. We then have the vector average turning from red to green in the middle, this line that snakes through the candles. And we don't have the trend signal line in favor, actually. If you go back one candle, you can see that it's red, but it does come into effect a little bit later on. What this means is we have 4 out of the 7 kind of initial targets that we look for, or indicators we look for when taking these positions. And what this means is some people will go for the starter target, some people will go for the extended target. It's smack bang in the middle. So really what the default approach is to go for the extended, but just check in on it. Now, you could do that a couple of times a day. You could just do that in the evening at the end of the day. It's entirely up to you. So for somebody going in for the basic starter target, you put in your account size. For example, let's say you're trading with, I don't know, £2,000, 2% risk. Generates your stake per point, your stop loss, and your target to put into your broker. In which case, we're looking about a 2-to-1 risk reward. It's a little bit higher than that on this opportunity, but roundabouts there. 267 pips as a stop versus a 667 pip starter target. And if you went for the starter target, being a little bit cautious, you'd have taken those 667 pips by the close of the candle on the next day. If you are going for the extended targets, you need to wait a little bit further. We do get a pullback. We continue the move onwards, bouncing off the middle of the market where there's normally resistance. That takes 1, 2, 3, 4, 5 days to hit its target, in which case you take 1,334 pips. That's a lot of pips. To put it into real context, if you're trading at a pound per pip, it's about £1,334. Not about, it's exactly. And you do not need to be trading on absurd sizes to turn this into some serious money. £2 per pip, you're nearly approaching about 3 grand, 2.7k, give or take the fractions. More than that, this trade hasn't actually ended. So we end our trades with an active stop, the final position you can take it to. When this green line and this green line both turn down to red, we close the trade. It's the final possible position. At the moment, the total opportunity from the trade was nearly about 2,000 pips. Pound per pip, 2 grand in your pocket, awaiting the best part of about 5 or 6 trading days. If you want to see how to trade this strategy, we'll be having a session later today at 7 o'clock. Pop along and join us. We'll not only show you how to run these tools and talk about the markets and the risk management and all that good stuff, but we will also be giving you some live opportunities that we'll be looking to take in the evening, so you can get into trades similar to this one. We have loads of trades you can see on this scanner tool on the left. 1 is today, 3 is 2 days before. It's a little bit off center, really, because it starts at 1, not 0. And you can see that we've had loads of opportunities going back over the last couple of weeks. Very quickly, I'll show you as well. You can actually see an active stop on this trade. Starter target, grey infill, meaning we're with the trend. Everything is lined up for this trade, actually. We go for starter, it's 1,000 pips versus a 600 pip stop loss. You go for an extended target. You don't quite reach it, but you can pull the trade out early with some custom active management. We'll show you all of that and more in our session at 7. Hopefully, we'll see you then. Bye-bye for now.